me first start by noting that it's been a distinct honor and privilege to work with all of you during my first year as regional manager here in the GCAS Columbia Region office. Your treasury teams are second to none in commitment and professionalism, and it has been both professionally and personally rewarding for me in the GCAS Columbia office to be part of the Adventist Church's financial process of instilling confidence. I hope that you view us as your trusted advisors, so don't hesitate to contact us anytime with your questions or concerns. Let me briefly introduce the audit team here in Columbia. So we're missing a few of my staff as well here. But we'll first start with Heather Brockett. She's an audit senior here in the office. You can go ahead and stand. She joined the GCAS office here back in January of 2011. Sitting on the end of the table there is Marvin Jordan. He joined the GCAS team in February of 2013 and just recently passed all parts of the CPA exam. Sable Grant, right behind Marvin there, joined the GCAS team in June 2013 and is also in the midst of taking her CPA exam. Keisha Stubbs, maybe she stepped out here, but she also joined the GCAS team in May of 2014 after graduating from Oakwood University. And then we have Horatio Hernandez-Blay, joined the GCAS team in June 2014, just recently here, after graduating from Southern Adventist University. And last but not least, Edward Julian, see back there hiding. He's our audit manager here in the office, and he's been with the GCAS office since September 2005. So let's start our GCAS journey here today. The purpose of the General Conference Auditing Service is to help ensure that members can give and worship with confidence, enable the church to grow. Most people do not find finances exciting, but they fund, with God's blessing, the growth of the church. Also, throughout the Bible, giving of tithes and offerings is described as an act of worship. This presentation illustrates GCAS's work in North America during 2013 and also talks about the types of opinions and issues in North America as well as the Columbia Union. Lastly, we will discuss the GCAS portal and how we can make it more efficient together. We'll also share with you the top 5 areas to focus on in preparing for your 2014 audit here in 2015. What was GCAS's audit responsibility for 2013? Well, as you can see on the graph here, the largest portion of our portfolio, representing 38%, is composed of educational institutions, mostly secondary schools, but also assisting on colleges and universities. Next in size is trust operations. That's approximately 21%. And that's followed by conferences and missions at 19%. Some other types of audits that we were responsible for in 2013 includes other entities. And in our office, that includes, as the presenters here were earlier today, we actually take part in the retirement fund audit for a North American division. But in North America, this also represents, there are medical clinics and community services centers, which represent the other category. Also includes publishing, HHES, ABCs, unions, policy audits for ADRA, and also division audits. What is the composition of the GCAS North America audit team in 2013? 40%, 47%, we have female auditors, 53% are male auditors, 64% are young adult, defined as less than 40 years of age. 83% are professionally certified as certified public accountants, or in Canada also an ACCA accreditation. These percentages are by and large in line with prior year for 2012. What were the GCAS work plan results for 2013? Well, out of a portfolio of 316 engagements for 2013, 221 engagements were completed. These engagements represent approximately $5.3 billion in assets and $1.6 billion in revenue. In the prior year, North America completed 75% of the total work plan. Engagements in process, a little less than half were educational institutions, also a little less than half were trust engagements, and 6 were conferences. In the prior year, this was equal to 12%, which is basically a 5% switch between completed and in process between 2012 and 2013. The engagements not attempted section of the pie. These are mostly trust engagements, about 29, because we do them once every 3 years. It's not on an annual basis. And the rest, representing 8, were academies that weren't necessarily ready for the audit, and also included 2 ABCs, and there was 1 other entity. In the prior year, this was equal to 13.5%, which is basically the same. What were the types of opinions rendered by GCAS North America in 2013? Well, as you can see here, standard opinions were equal to 80%, the majority of our reports, while the prior year was equal to 73%. So 2013 certainly represents an improvement. Qualified opinions were equal to 16%, while the prior year was equal to 21%. In both years, the largest group receiving these types of opinions were the secondary schools, plus a few conferences. Disclaimed opinions. These are equal to 4%. Prior year, it was equal to 5.62%. Again, 2013 is certainly an improvement over 2012. How does the Columbia Union compare to North America? Well, we had found here in this union, and in our region here, standard opinions were only equal to 57% in 2013, and qualified opinions were equal to 43%. Fortunately, there were no disclaimers. The predominant reason for so many qualifications in this union is predominantly related to organizations not recording real property accordingly. For example, the conference has local church and school property not included in its records, or the academy has property listed on its financial statements when it really should be listed on the higher organization or the conference's financial statements. Policy compliance reports. What were the types of policy compliance reports rendered by GCAS North America for 2013? Well, the results are just about identical to the prior year. Non-standard reports represented 78% of the portfolio, while standard reports represented 22%. Non-standard policy compliance reports are spread across the entire portfolio, consistent with the distribution of our clients. Well, once again, the question here is, well, how does the Columbia Union compare to the national average? Well, as it turns out, it was not quite as good as the North America results. Our statistics show that non-standard reports actually represented 95% of the portfolio, while standard reports represented only 5%. And we'll get into some of those root causes here in a moment. So what were the root causes for the non-standard opinions on 2013 financial statements for GCAS North America? Well, virtually we have found in 13 was the same as in 2012. Number 1, as we talked about a little bit earlier here, was not recording real property by the appropriate organization. The second bullet there, unable to obtain sufficient audit evidence for whatever the specific matter might have been. The third bullet there, state of the accounting records. The next one, did not prepare a statement of cash flows. And lastly, a gap departure for various reasons. Typically in this case, we found maybe either recording pledges, discounts, or allowances. Well, what do we find here in the Columbia Union? Actually, the Columbia Union organizations are consistent with at least the top 2 reasons that are listed here. And as I discussed previously, not recording real property by the appropriate organization, and then in some instances unable to obtain sufficient audit evidence. Non-standard policy compliance reports. What were the root causes for the non-standard policy compliance reports in 2013 in North America? Well, the number 1 reason, I guess as we all can suspect here, was missing conflict of interest statements. Number 2, this is a new item here for 2013, compliance with various investment policies. Number 3, remuneration and tuition assistance policies. That one's also new here in 2013. Last two here, inadequate financial statements to the governing committee and or board. And lastly, local church and school reviews not completed. How does the Columbia Union compare to North America in this particular case? Actually, Columbia Union organizations are consistent with North America. However, there are some additional ones I want to discuss real briefly. We found that one popular item here was service records were either missing, service records were not completed correctly, or they weren't they weren't completed timely. Also, another factor that we have found for a few organizations was that the use of tithe for education was not in compliance with policy. I'll talk about a couple of those items here more in a moment about how we can implement a corrective action plan for some of those policy violations. What were the main internal control weaknesses in 2013 for GCAS North America? One reason we found in North America was ineffective oversight of the accounting or reporting functions. Number two, inadequate evaluation of allowance for uncollectible accounts. Inadequate segregation of duties. This could include potentially combination of incompatible functions such as custody, recording, approval, and authorization. The next item here, temporarily restricted net assets, accounting deficiencies. This can include not releasing the use of that restricted income, either correctly or timely. Misclassification of income as either unrestricted when it's really restricted income. And then lastly, property, plant, and equipment acquisitions and depreciation. A couple items new to this list, 2013 for North America, was the number one issue there with ineffective oversight of the accounting and reporting functions, and then property, plant, and equipment acquisitions and depreciation. Well, how does the Columbia Union compare to North America? Actually, the Columbia Union organizations are consistent with North America also in this case. However, we did find an unusual amount of retirement contribution errors, which we worked with Harold Green in the IT department, and also Michael Park's group with APS in the SC group. It will be imperative for your payroll teams to be cognizant of any changes that are continually made by the APS team so that you can assess the impact to your organization's control structure so that you can modify your controls and processes and also receive proper training as necessary. Lastly, according to the 2014 report to the nations by the Association of Certified Fraud Examiners, fraud cases involving not-for-profit organizations, and specifically median losses, have increased 20% since 2010. Therefore, our strategy here in the GCAS Columbia office for 2015 is to ensure that all of our clients start the design and implementation of a fraud risk assessment. The strategy will include working with your audit committee chair folks, also organization treasurers and CFOs, to make sure that this fraud risk assessment is implemented and operating as designed. What are some emerging issues for 2015? Many of these items are more related to the international environment, but we do anticipate a certain extent and impact in North America. In terms of professional standards, accounting for leases. Under existing standards, a majority of leases are not reported on a lessee's balance sheet. In 2013, the International Accounting Standards Board issued an exposure draft outlining proposed changes to the accounting for leases. The proposal required a lessee of more than 12 months, the proposal required a lessee to recognize assets and liabilities for the rights and obligations created by leases of more than 12 months, thereby causing most leases to be reported on a lessee's balance sheet. This proposal also provided two methods to recognize the expense, depending on whether the underlying asset was equipment or real estate. In response to the feedback about the complexity of the dual approach to expense recognition, the International Accounting Standards Board is re-deliberating and expected to propose a single model for recognition of expense. The next item, conceptual framework. International Accounting Standards Board issued a discussion paper in 2013 as part of a project to provide a complete an updated conceptual framework to use when it develops or revises international financial reporting standards. In 2014, the International Accounting Standards Board has been reviewing feedback to the discussion paper and re-deliberating, and is expected to issue an exposure draft in early 2015. The Auditor's Report. In 2013, International Auditing and Assurance Standards Board issued an exposure draft for proposed changes in the content of the Auditor's Report on the financial statements in an effort to improve the report. The proposal would require certain additional information to be included in the Auditor's Report. This includes the reporting of the most significant matters during the audit to be reported as key audit matters, the appropriateness of management's use of the going concern basis of accounting, also improved description of the responsibilities of the auditor, and lastly, including the name of the engagement partner in the report. During 2014, the International Auditing and Assurance Standards Board has considered feedback and refined the proposed standards and expects to issue the final standard later this year. Moving on down to denominational requirements. Use of tithe. The 2012 Annual Council, the Executive Committee of the General Conference of Seventh-day Adventists, amended the denomination's working policies related to tithe funds. Part of these policy amendments require monitoring of the use of tithe funds. Currently, the denomination is finalizing tools to more effectively monitor various organizations' use of tithe to assure that tithe funds are used according to biblical principle. Financial oversight. The denomination is developing an additional level of financial oversight to supplement financial audits, financial reviews, and local church audits. This new level of financial oversight will be referred to as a financial inspection and is intended to be suitable for smaller and less complex organizations, for which a higher level of service will be out of scale with the associated risks. In addition, as we probably heard from Seth here this morning, Columbia Union is looking to implement new standards for reviewing financial records of local churches and missions in the Union Territory, effective January 1, 2016. An item to keep in mind as you close your 2014 year. This is also an item that we reviewed at last year's Treasury meetings. And this is specifically Accounting Standards Update, or ASU, 2013-04. This is accounting for obligations resulting from joint and several liability arrangements. As we have seen, there has been diversity of practice in the way entities accounted for joint and several liability arrangements. Some entities record the entire amount under the joint and several liability arrangements. Some entities record sometimes they record them because each entity was legally obligated and recorded a receivable for amounts expected to be paid by the co-obligors. Other entities recorded less than the total amount of the obligation, such as an amount that was allocated, an amount corresponding to maybe the proceeds that was received, or the portion of the amount the entity agreed to pay. Well, we have some standardization here. Effective for fiscal years ending after December 15, 2014, non-public entities, which is the entities that we currently work for, are to measure their obligations resulting from joint and several liability arrangements that are fixed at the reporting date as the sum of A, the amount the reporting entity agreed to pay on the basis of its arrangement among its co-obligors, plus B, any additional amount the reporting entity expects to pay on behalf of the co-obligors. Additionally, an entity should disclose the nature and amount of the obligation, as well as other information about those obligations in the notes to the financial statements. What are some scenarios here? The most common application for this in our environment is when a conference co-signs or guarantees a bank loan for a church. Our practice has been to show the full amount of the loan as a note payable on the conference books, offset by a note receivable normally for the same amount. This was one of the common methods used, and it was one of the more conservative methods. Based on the update to the standard, applicable for December 31st, 14 closing dates for many of our organizations here, conferences will no longer have to automatically record the full amount of the note payable and offsetting receivable in their general ledger. Instead, this information is only required in the financial statement footnotes. Only if they have actually agreed to make payments on the loan. For example, the guarantee has been called and put into effect, do they have to record a note payable. In that case, the amount they record is the amount they have agreed to pay, plus the amount they expect they may have to pay on behalf of the co-borrower. They don't automatically record the full amount of the loan. Another item. This should be simpler than in the past and reflect only what is expected to be paid. There's no bottom line impact. The prior year column could be updated for comparison purposes in the year the change is adopted, in 2014 in this case, but it's not required. Additional note from a practical point of view, if the conference expects the local entity to repay some of the amount, they could record a receivable from the local church or the local entity, but they need to be realistic about its ultimate collectability. And as I said before, conferences are not required to restate the prior year, but they can if they want to. And then, of course, disclosure in the financial statements will be required regarding this change. Making the portal easier. The GCAS portal has had some growing pains over the past couple of years. Part of it has saved us time and money. We have had some complaints about people having trouble with the login or how small the screen is when they're trying to upload a lot of documents. But the number one complaint has been auditors asking for a document that has already been uploaded to the portal. Well, we have decided the best way to help avoid this common complaint is through a standardized file naming system. In the example above, the section cash is from the audit preparation list, which is sent to you by our administrative assistant, Diane Beyer. The next slide will show you an example of that, and we'll get to that in a moment. The description should be the most commonly used identifier, and then the year at the end. The year identifier will not only help keep files in their proper period, but makes it easier for you to update each year. Your audit preparation list will have the suggested file name format, listed in each section. This is an example of a typical audit prep list. So again, when you're getting your files ready to upload, which will be here before you know it, they should correspond to this particular list. The top section of this slide is the administrative section. The abbreviation to use as part of the file name is next to the section title. So in this case, you would save the school board member list as quote-unquote AD board members 2014. So it's pretty straightforward, and we're hoping that this will help, I think, alleviate some of the complaints regarding auditors missing files that are uploaded to the portal. The first year you use this naming system may take a little more time, but in the long run, audit preparation will be more streamlined, which means you will see us less and you will feel less stress. To help you along the way, I provided for you here on this slide an anti-stress kit, which I understand has been widely viewed as successful. Now, wrapping up my presentation here today before I take a lot of your questions. Here are some audit preparation items to leverage in 2014 in order to reduce audit fees and also to either help policy compliance or to help your general overall closing of your financial statements. We've observed some of these items here in the Columbia Union, so we certainly want to use this forum here to present these particular observations. The first item that we've noticed here is the activity schedules. We're probably all fairly familiar with these activity schedules. You have investments in this case, you have a beginning balance, you have maybe additional investments you've made, additions, you've had some sales, and then you have like an ending balance, and then you have your updating value, your ending values to market. Your activity schedules can also include notes and loans receivable and payable, and those are important schedules for us to adequately audit and also to tie out to your statement footnotes. If these are not performed, depending on the volume of activity, can negatively impact your audit fees, which impact the Columbia Union and also North American Division. The next bullet, use of tithe for education calculation. Use of tithe calculation, as highlighted in NADWP V1515, limits the use of tithe for elementary education at 30% of the total salaries and allowances of principals and teachers, secondary schools. Tithe can be used to fund salaries and allowances for Bible departments, chaplains, guidance counselors, resident hall deans, principals, VPs, and business managers, while 20% can be used for instructional employees. Compliance with investment policies calculation, according to NADWP S85. These compliance items include, but are not limited to, organization not owning more than a certain percent, look at this case it's 4.9%, changing soon, of the total equity of another entity. Also, other than government debt, the organization has not invested more than 5% of its total assets in the securities of any one issuer. Another item, not invested more than 15% of assets under management in any one industry, investment grade or better, at time of purchase. What can you do to address these items? Well, in our audit preparation, or your audit preparation list that we'll upload to the portal here shortly, we have worksheets that we can provide you for both the use of tithe calculation and also investment compliance to use in performing these calculations that you will include in your audit preparation list. As we discussed, these have been a top 5 item in the Columbia Union Policy Compliance Reports as violations. So these solutions will help enable policy compliance and also help to reduce audit fees. Please perform these calculations along with your other year-end closing procedures. One item to note is if you have surpassed the use of tithe ceiling for education, it's important to consider contacting Seth at the union, possibly exchanging tithe for non-tithe via the union. Net asset roll forward reconciliation, another item on the list here. Sometimes there are inappropriate entries that we find to the net asset accounts. Entries might have been made after you delivered us the trial balances, or the prior year audit entries were overlooked for some reason. By performing a reconciliation of your net asset roll forward during your closing procedures, you will proactively identify any of these errors. Intercompany balances and transactions reconciliation. Any accounts between conferences, academies, and other related organizations must be reconciled as part of your year-end closing procedures. These reconciliations should also include reconciling the subsidies for either academy or elementary. Any identified differences should be detected and corrected in a timely fashion. One last item that's not actually on the list here, but is actually important, and that is timeliness of signing the representation letter and release letter that we send to you as part of our draft report exposure process. If it is all possible, please remit that signed letter back to our office as soon as you can. If you receive it, the reason why that is if we receive it more than 2 weeks, and even it's more of a judgmental time period, but usually for 2 weeks, we are bound by standards to reopen fieldwork via subsequent event review, which actually increases our audit fees. So it's important to timely address the representation release letter that we send out to you as part of the draft process. Well, in closing, I'll mention some counsel from Paul to Titus regarding the right conduct in God's household. In Titus chapter 2, verse 6, let everything you do reflect the integrity and seriousness of your teaching. Now, let me try to address any questions you may have, and may God continue to bless you all as you work in His vineyard. Thank you. So now, any rigorous questions that you might have, like joint and several liabilities? That's a great one, isn't it? Okay, well, if there aren't any questions at this time, hopefully you all have my email address, my phone number.
He's not anonymous.
Yes. Oh.
Hello, can you hear me?
Yes, I can.
Yeah, you mentioned something about the percentages of male and female in the prior year, the composition of GCAS. How did that change compared to this year compared to the prior year?
Great question. And actually, it was pretty similar to 2012, the prior year, except we had 1% higher for male auditors. I think it went from 53 to 54, and of course 1% less for female auditors. So it's pretty similar, but just a change by 1%. Thanks for the question. Well, don't hesitate to contact me or my associates here in the Columbia Region office. We certainly appreciate working with you every single day. I hope you view us as trusted advisors for helping you in preparing your financial statements and completing your corrective action plans for any control deficiencies that you may have. So hopefully we can answer any questions that you may have. So don't hesitate to contact us. So thank you.